After a difficult year for China, many observers of the world's #2 economy are suggesting that two different versions of China may emerge in 2016. The pessimists suggest that China is on the verge of a seismic instability due to an inability now to get a handle on major social and economic hurdles. The optimists, meanwhile, say that China will succeed in managing these hurdles and remain relatively stable by implementing much-needed reforms. So what China will we see in 2016? Here to discuss, we are joined by Sam Chester of Clarity Capital, as well as Aurora Carlson, OurCrowd head of the Asia desk. Thank you both very much for being with us.
Thank you.
So where do you see China going in 2016?
2016 has a lot in store for China. I mean, I think in terms of the economics, we'll definitely see slowed growth rates. I think a big question people are asking is China going to fall or succeed? And with China, it's always a combination, but it will succeed. Most countries would be happy with a growth rate hovering around 6 or 7%. We'll see some issues with the currency, issue of currency devaluation. I know the Chinese are planning to ask for the currency to be part of the IMF basket, which will raise some alarm with regards to its devaluation. And I think also given the current social unrest and issues with environmental problems, pollution, that could also raise some pretty significant issues.
Well, what about you, Sam?
I would really point to two issues. Just before I do so, one of the people who've taught me first China, Dr. David Lampton, he's one of the preeminent scholars in the US, he used to tell us that no leaders face a challenge as much as Chinese leaders, who have to go to bed every single night figuring out how to deal with the challenges of a 1 billion person society. So the challenges that the people in Beijing and throughout China are facing, those with the responsibility, are immense in ways that we really can't imagine. The two things I would point to, first, I would say a lot of people are now pointing to China and they're looking back to Japan in the 1980s. Let's remember, in Japan in the 1980s had double-digit growth for almost a decade. And it had then a real estate bubble and a stock market bubble, very, very similar to what you're seeing over China in the last decade. And of course, in 2015, you had both a real estate bubble averted in China and a stock market bubble that was not averted. So there are some dangers there. There's a lot of similarities between China and Japan. That's going to be very key to watch in 2016. Secondly, what's happening in 2016 for China's two closest sort of competitors and allies, Taiwan and the US, both are facing presidential elections. Both are going to elect people who are going to take a much tougher stance on China. Fair or not, the Obama administration has been seen over the last 8 years in China as someone they can sort of push around and have their way, particularly in Asia. And the same is true in Taiwan. That is going to change in 2016.
Interesting point here. Will China still, though, be a hot spot for investors?
I mean, I think absolutely. Just given my work at OurCrowd, we've been finding absolute success rates in terms of the Chinese interest and dollars flowing through our platform. But that's in the field of alternative investments. We're also still seeing high investments in traditional industries, in real estate, in infrastructure, both in Israel and all over the world.
Is that the nature because they have so many people, such a large consumer base, or something else?
Go ahead.
I would jump in. I would say I agree with Aurora. I think that the key here is that China is going to remain attractive for investors, but the old China of manufacturing, that's going to slowly recede to the past. Indeed, in 2015, we saw that services and consumption actually became a larger contributor to Chinese GDP than industry. So for Westerners and others around the world looking to invest in China, the China of manufacturing is less and less attractive. But as Aurora pointed out, the China of services, of consumption, of new industries such as drones, that's really where investors globally are going to be looking at in China. And just on the stock market, which we mentioned briefly and is always of interest, people were in great alarm over the Chinese stock market this summer when it became a bubble and then it collapsed. But to be very clear, the Shanghai index, China's leading stock market, it provided 12% year-end positive growth for investors. The S&P 500 in New York, that provided about 0.2, so negative. So as far as investors are concerned, there still is a lot of positive growth to be seen in China.
Interesting point there. But let's look at the stories of 2015. Will they continue to dominate the headlines in 2016 when it comes to China?
Absolutely. So as I mentioned before, I think pollution will still be definitely up there. Unfortunately, the situation, as we know on a daily basis, isn't necessarily good in terms of the air that we breathe. But China's planning to do a lot in 2016 vis-a-vis those problems. I know they're planning to shut down about 1,000 coal plants, which is incredible. I don't see any other country kind of doing that to address its pollution problems. But the other kind of story that has been gaining traction this year that we'll see a lot more of is really related to the internet space. China is investing on a government level far more than any other country in its internet promotion programs. Almost this year, it'll be in 2016. It's planned on being almost $200 billion in amping up its 4G and broadband wireless programs around the country, which is something to be noted.
Interesting. Well, that wraps up our segment for now, but thank you very much for joining us. And of course, we will talk about China in the new year.